All right, hi everyone. Welcome to today's live webinar brought to you by IronFX, where today we'll have the live trading session. Right. Trust you've all had a good week so far. Right. Before we start today's session, I take note of the risk warning and a disclaimer, right, that the products here are traded on margin and carry a high level of risk, and it is possible to lose all your capital. And also take note that the information in this webinar should not be considered as investment advice or investment recommendation, but instead just educational material only. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a quick look at what's left on the economic calendar for the rest of this week. Right, it's actually been a pretty heavy week, alongside with ISM PMI reports, the Bank of Canada's interest rate decision overnight, as well as labor market data as well. We've had the JOLTS job openings data last night, which showed job or vacancies dwindling even further in the month of July, right? We've seen jobs have or vacancies, job openings or vacancies have dwindled quite significantly since August of 2023, which signals slower pace of hiring by US corporations. And up today as well, we've got the ADP employment report as well as unemployment claims. And of course, tomorrow we've got the highly anticipated non-farm payrolls that will be released alongside with the unemployment rate by the Bureau of Labor Statistics. Right. So let's take a look at the calendar, what's left of the calendar for this week. Right. As I mentioned, we've got ADP unemployment report out today at 12:15 p.m. GMT time. Unemployment claims is out at 12:30 p.m. We've also got ISM services PMI out at 2 p.m. GMT. And of course, tomorrow we've got non-farm payrolls and the unemployment rate out at 12:30 p.m. GMT. Right, taking a little closer look at the most recent ADP employment figures, right? So we can see here, July's figures came in at 122,000, which was the lowest level in 6 months and significantly lower than its forecast as well, right? So job growth has slowed significantly since April, and the recent job gains in July came in well below the 12-month average of 147,000. So take note, July's only saw 122 jobs being added to the payrolls based on the ADP employment report, which is much lower than the 12-month average of 147,000. Now, looking at the forecast for August, we're expecting 144,000 jobs to be created. This is also, although it's a slight uptick from July's figures, but it still remains underneath the 12-month average, as well as being below the prior month's job gains as well. So you can see job creation has significantly slowed down, as indicated by the most recent ADP employment report. So should we see another round of softer than expected data, right? So if we see another result that's going to be lower than the forecast, which in this case is 144,000, we can expect significant headwinds for the US dollar later today. Now, alongside that as well, just 15 minutes after, at 12:30 p.m. GMT, we have unemployment claims due for release, right? Unemployment claims basically track the number of Americans filing for unemployment benefits. So when we see this this metric rising, right, as we've seen since end of April till mid-July, right, when we see an upward trend like this, it means that, of course, there are more Americans filing for unemployment benefits. So this signals a potential weakness in the US labor market, right? So this is what we saw at the end of April till mid and July as well. Now, over the last 4 weeks, we've seen claims start to come off. So that's good, right? So claims have sort of reversed course and started to trend lower, which signals, of course, when we have less Americans filing for unemployment benefits, of course, that signals a slightly more resilient labor market. Now, the previous week's figure came in at 231,000, and this week we are seeing an unchanged estimate as well. Right. So despite unemployment claims sort of reversing course over the last 4 weeks, right? If you compare the current readings to the prior averages that we'd seen earlier in the year, it's significantly, or it's pretty much higher than the averages that we saw in the first half of this year, right? So still some slight concern with regards to unemployment claims. So similarly, if we do see claims come in higher than the forecast of 231,000, that means we have more than expected Americans filing for unemployment benefits. This could potentially be a bearish catalyst for the US dollar. And conversely, if we have claims coming in less than the forecast of 231,000, this means this signals a slightly more resilient labor market, which in turn is likely to function as a bullish catalyst for the dollar. So that, of course, would mean quite likely currency pairs like the euro, pound, Aussie, Kiwi, alongside with gold should fall. Now, looking at the 4-week average, the 4-week average currently sits at 236,000, right? So far, right, claims have been trending lower uh, over the last few weeks, right? But overall, when you look at the last 4 weeks, yes, it has claims have come in under the 4-week average. But if you look at it on a slightly longer time frame, claims have remained above this earlier averages as well. Right. And finally, of course, moving over to the BLS report tomorrow. So that's the Bureau of Labor Statistics, right? They're going to release their employment report where we'll get the latest insight into non-farm payrolls and the unemployment rate. Right. So we can see here in July, non-farm payrolls have slowed significantly, with July's reading coming in at only just 114,000, well below the forecast of 175,000. And not only that, we have seen June's figures being revised lower. Not only June, but April and May's figures have also been revised lower. In addition to that, we've also seen job figures from the month of January till March revised lower as well. Oh, right, yeah. So basically, we are seeing a lot of downward revision for non-farm payrolls, which signifies a slightly less resilient labor market than expected, right? And should we see uh, this week's, rather, the figures for August come in lower than the forecast of 164,000, that is once again very likely going to cause significant headwinds for the US dollar, right? So we can also see that over the last couple of months in June and July, non-farm payrolls have also started to print underneath the 12-month average as well. If you look at the 12-month average, it currently stands at 209,000, and of course a reading of 179 in June, and a reading of 114,000 in July is clearly well below this 12-month average. And also the forecast for August as well also sits underneath this 12-month average as well. So we are seeing serious slowdown in job creation as reported by the non-farm payrolls. And at the same time, right, we are seeing the unemployment rate move higher as well. The unemployment rate has now moved higher over the past 4 consecutive months. From March, it was as low as 3.8%, and now it currently stands at 4.3%. Now, the forecast for August is telling us we are expecting unemployment rate to edge a little bit lower, down to 4.2%. But as we've seen, where the labor market isn't looking that great. So if we do see a surprise upside to the unemployment rate, if we do see it remaining at 4.3%, or perhaps even coming in higher at 4.4%, this is once again going to function as a very strong bearish catalyst for the US dollar. So a combination of weaker than expected non-farm payroll change, accompanied by a higher unemployment rate, which is what we saw in July, is very likely going to cause a strong sell-off for the US dollar, right? So we can expect a lot of headwinds for this, for the US dollar. Tomorrow, should we see another month of weaker than expected non-farm payrolls, and of course, a higher unemployment rate. All right, now with that, let's move on over to the charts and trading view and begin our analysis. Right, so we're going to start on the daily time frame with the dollar index. And when we can see that if we go down over to the, let's see, 80 jolts, even yesterday we had jolts as well. Jolts was released at, what time was it? I think it was, let me see, if we go onto the charts, I can see exactly 30 minutes. Go down to the 30-minute chart. Yep, sorry, there we go. So Jolts data, Jolts job openings data was released yesterday, Wednesday, 4th of September at 1400 hours, right? 1400 hours as we had Jolts job data being released, and we saw the dollar drop quite strongly, right? It was the dollar index was trading around 101.60 prior to that, but it fell through this level, dropping as low as 101.23. So dropping about 40 pips, 40 odd pips before retracing a little bit higher, pulling back again. And it looks like it has broken down through this level once more earlier today as well, right? Or not earlier today, but just a couple of hours ago, right? Just 1.5 hours ago, it has broken through this level as well. So you can see very clear uh, bearish momentum for the dollar index, right? We can see a clear series of lower highs and lower lows. So in fact, we probably have a very nice bearish channel, perhaps, right? We may have a potential bearish channel here, right? Not the most ideal bearish channel, but you can see we can see the downtrend much more clearly, right? A very clear series of lower highs and lower lows, right? We saw the dollar index drop as low as 100.55 two Wednesdays ago on 28th of August. And of course, if we do see another round of softer ADP employment report as well as non-farm payrolls, we are very likely to see this level here, this swing low here that occurred last Wednesday, to be tested once more. So very clearly, the first major support for the dollar index is going to be at this multi-swing low level at 100.61. We can see prior to the last week of August, we also saw the dollar index make a significant swing low here at the end of December 2023, right? On 28th of December, it made a significant swing low support here. And once again, it has found support at this level last week on Tuesday and Wednesday, 27 and 28 of August. So very clearly, this is a very strong support zone here. Now, what this also means is if we see the dollar index continue to drop lower, this support zone or this at 100.61 can also be used as a potential take profit level, right? So we are going to use this support level here as a potential take profit zone for any short dollar index position that you may have. Remember, the dollar is looking very weak. And we also have labor market data out today and tomorrow, both of which could drive the dollar lower. And that means we could potentially see the dollar index drop towards this multi-swing low support at 100.61. So this is a very good area to identify as a potential take profit zone should you have any short dollar positions at play, or if you're planning to put on short dollar positions as well, right? This is a very good area to identify as a potential take profit zone. Now, trying to find the next support level, we have to zoom out a little bit, and we can see that we have a nice swing low taking place here in mid-July of 2023. We can see the dollar index reversed off 103.35 at the beginning of July last year and dropped as low as 99.60 by mid-July. So you can see a very significant sharp downfall here before stabilizing around this level and making a nice swing low here and bouncing higher. So very clearly, this is the next support level for the dollar index. So the second support is identified at 99.77, which itself is another swing low that occurred in mid-July of 2023. Right. So once again, we're seeing strong overhead pressures for the dollar. It's pushing dollar index lower. And we have employment data out today and tomorrow as well, which could potentially drive the dollar index all the way down towards its first support here. This first support is a multi-swing low support at 100.61, which is a good area to target as a potential take profit zone for any short dollar index positions that you may have. Right. Now let's take a look at resistances. Right. There's a nice swing high resistance taking place here on 2nd of September, right? And when you pull it across all the way here, it's sort of like an overlap level as well, right? We can see the dollar index finding support at 101.74 on 4th of August, 10th of August in 2023, and also finding support here on 14th of December 2023. So this level here previously was a pretty decent support level, which is now functioning as resistance, thus creating an overlap resistance here, which we can use to identify as the first resistance at 101.74. Now trying to identify the second resistance, right? I see a pretty decent overlap, another overlap resistance level here at 102.54. We can see previously the dollar index ran into resistance here and in December of 2023, in the first couple of weeks of January of this year, finding a support here on 8th of March, right? We can see the price making the dollar index making a nice swing low bounce here on 8th of March, and also briefly finding support here on 5th as well. So this creates a very nice overlap level that we can use to identify as the second resistance. Now, of course, we can also run a Fibonacci retracement starting from this swing high that occurred here on the 20th of June, going down to the swing low of last week. When we pull up all the fibs, we can see that the first and second resistance levels also have the presence of a 23 and 38.2% Fibonacci retracement. So let's just keep these two levels on. Then we can highlight this as a zone. Right, so these are the key levels for the dollar index on the daily time frame. Right, let's look at it on the 4-hour time frame and see if there's anything else that we can identify. If there's any need to fine-tune the analysis. Right, so we can see here, I think this is pretty much fine, right? What we have identified on the daily time frame is more than applicable on the 4-hour time frame as well. As you can see, a dollar index continues to head south. And this first support here at 100.61 is a very good level to identify as a potential take profit zone here. Now, of course, should we see weaker than expected jobs data over the next couple of days, we can probably expect that this first support level is also going to get taken out, and we may see a potential bearish breakout take place as well by the end of tomorrow, right? Okay, so these are the key levels for the dollar index on the daily and 4-hour time frames. Let's move on over to gold. And of course, should you have any requests for any other instruments, do let me know. Do drop them in the chat box here, and I'll be more than happy to go through the analysis with you, right? Do drop your requests in the chat box or Q&A box. Now, looking at gold, right? We can see here with dollar index selling off strongly. This is usually or typically going to function as a strong tailwind for gold prices as well, right? Remember, the US dollar and gold share an inverse relationship, right? Or they have an inverse correlation. So that means when the value of the dollar is rising, typically gold prices are falling. And conversely, when the value of the dollar is dropping, we can expect it to function as a tailwind for gold prices, which is currently what we are seeing now. Right. Gold is also has been pretty elevated, with making its most recent all-time high, intraday all-time high on 20th of August at $2,531 per ounce. So you can see here on 20th of August, it made a new intraday all-time high. This is the intraday all-time high for spot prices. And once again, we see this instrument rising up towards this level once more. So XAU USD is an instrument that tracks spot futures prices for gold. And quite clearly, this is the first resistance, right? The first resistance for gold is simply going to be its intraday all-time high that occurred on 20th of August at $2,531.65 per ounce here. Now, in such a scenario, how can we possibly identify the next resistance area, right? Remember, with price currently trading close to its all-time high, there's no other pullback, overlap, or swing high resistance levels that we can reference. So in such a scenario, we're going to have to rely on Fibonacci tools. So in this case, we can rely on a Fibonacci projection as well as a Fibonacci extension as well. Now, to find extension levels, we're going to have to run a Fibonacci retracement. So this retracement is going to run from here, 17th of July, this swing high on 17th of July, going down to this swing low here on the 25th. Key extension levels sit at 127 and 161%. You can see clearly that 127% has been surpassed, right? So that's fine. Let's just remove that from the analysis. But we can see 161 sitting at 2,564. Now, this level here could be a potential resistance, or could be the next potential resistance for gold. Right. Now, I also mentioned we can use a Fibonacci projection. So the projection involves 3 points. Starting point is going to be here, 26th of June, going up to point 2 on 17th of July, and ending at point 3, which is on the 25th. Right, so you can see that uh, the projection levels at 61 and 78.6 have already been surpassed. But however, we can see 100% sitting just above the intraday all-time high. So we can keep the 100% projection, get rid of the others, and we can highlight the first resistance as a zone, right? This is going to be a pretty strong resistance zone between 2,531.65 and 2,543 and 12, right? So a strong resistance zone here. Now let's see, we can also probably try and run another Fibonacci retracement starting from this swing high to this low here. No, this is not too good. Let me see. Maybe it's a projection that we can use, right? I think we use this projection from here, 14th of February, 0.1, going up to 0.2 on the 12th of April and ending at 0.3, 3rd of May. Let's pull up all the projection levels, right? And we can see the 61% projection sitting quite close to the 161% extension. This is where we can identify that another strong resistance barrier here. Right, so basically you can see this zone that's above the intraday all-time high consists of various Fibonacci projections and Fibonacci extensions as well. They're all aligned quite close to one another, signifying a real strong resistance barrier. But remember, take note, right? Because we are seeing we're seeing significant weakness in the US dollar. This is quite likely going to keep gold prices elevated. And we may even see by the end of this week, especially if we do see labor market continue to deteriorate in the US, we're quite likely to see gold prices push on higher and at least make an attempt to hit $2,550 per ounce, right? It's quite likely we may see this level being tested uh, quite strongly later on tomorrow. Right, so these are the key resistance levels for gold. Let's see in terms of support, right? I see a very nice overlap support level here at $2,483.65. And we can see previously this was multi-swing high resistance that was in place from 17th of July to 13th of August, right? We can see the first swing high resistance taking place here on 17th of July. Second swing high resistance taking place on the 2nd of August. And the third resistance taking place here on the 14th. So what was previously a multi-swing high resistance then proceeded to function as support not once but twice. Right? It first found support on the 22nd of August, thus creating an overlap level, and then finding support once again on the 3rd and 4th of September this week. So we can see quite clearly this is a very significant overlap level, which we can use to identify as the first support. So this is at $2,483.65. Now I'm trying to find the second support, right? I see another overlap level, and that's at 2,447.39. So once again, we see a very nice swing high resistance being formed here between 1st and 3rd August or 5th August, after which it functioned as a pullback support on 14th and 15th of August. So this creates another overlap, which we can use to identify as the second support. Right, so second support is at $2,447.39. Right, so that means here, right, so if we have any long positions for gold, right, if you have any long positions for gold, where you can identify a potential take profit zone is close to this intraday all-time high, right? The intraday all-time high at $2,531.65 is a good area to identify as your first take profit zone for any long gold trades that you may have, right? After bouncing off this first support on Tuesday and Wednesday, and we see today a very strong rise for this precious metal, right? So identifying your take profit level close to the intraday all-time high is a suitable area to do so. Right. Now we can also run a Fibonacci retracement starting from this swing low here on 7th of August going up to the intraday all-time high on the 20th. Let's pull up all the fibs. And we can see that we have a 38.2% Fibonacci retracement that sits just underneath the first support and the 61.8% underneath the second. So let's just keep these two retracements and then highlight them as a zone here as well. Right, so once again, the bias for gold looks to be to the upside, especially with such a weak dollar. And then we can target this first resistance here at $2,531 as a potential take profit zone for any long gold positions that you may have. Now, let's zoom on down to the 4-hour time frame and see if there's a need to fine-tune the levels. Right, I think it pretty much this is fine. What we have identified on the daily time frame is more than applicable on the 4-hour time frame as well. We can see extremely clearly the major resistance areas and the major support areas as well. Remember, resistance areas can be used to be identified as potential take profit zones for the long trades, and conversely, major support levels such as this first support here for the dollar index, can be used as in identification of potential take profit zones for any short trades as well. So that's the importance of identifying significant support and resistance levels, because they help us to identify not only entry and exit points, but it can also help us identify suitable stop loss levels as well. Okay, so these are the key levels for gold and dollar index. Then let's move on over to oil, right? And then we'll head back down to the currency pairs once again, right? Crude prices have remained under significant pressures for most parts of or since mid-July, right? After making a high of about $84.70 per barrel in mid-July, WTI oil has reversed strongly and dropped as low as $71.80 in the first week of August before rebounding strongly and then dropping once again and making multiple swing highs and lows as well. But generally, we can see this commodity has been in a strong downtrend as well. We see very clearly a series of lower highs and lower lows. So we probably have a pretty decent bearish channel for this commodity as well, right? There we go. See, look at that. We see several touches on the upper trend line of this bearish channel and about 3 to 4 touches on the lower trend line of the bearish channel as well. So you can see very clearly price has continued to trade within this bearish channel here. And once again, after hitting the bottom of this bearish channel yesterday on Wednesday, we see a nice consolidation in crude prices, and it looks to be retracing a little bit higher. Right? And not only is the bearish channel highlighting the downward momentum, we also see this commodity trading underneath the bearish Ichimoku cloud itself. Remember, when any instrument trades underneath the bearish Ichimoku cloud and the cloud is red in color, it signifies strong bearish momentum. And this is what we saw and this is the opposite is what we saw in March. In March to April, we saw WTI oil trading above the green Ichimoku cloud, right? The green color highlights strong bullish momentum, and the upward trend here, of course, uh, further gives us further significance to the strength of this bullish momentum here. Now coming back, you can see price has found support on the lower trend line of the bearish channel yesterday. So quite clearly, this is around this zone here is our first support for our WTI oil. So $69.34 is the first support for oil here. Right. So we have a swing low that took place on the 3rd of January. And at the same time, crude oil has found support at the swing low as well as finding support at the lower trend line of the bearish channel, right? So the intersection of the lower trend line of the bearish channel along with the first support to help us identify a major support zone. And we see crude prices retracing a little bit higher. Now, what about resistance? To identify potential resistance, we can run a Fibonacci retracement as well. Starting from this swing high on 26th of August, going down to the low of yesterday. Let's pull out all the fibs. And we can see there's a couple of pullback resistances, right? There's a pullback resistance level here at $73 per barrel. There's one pullback resistance here on 4th of June, 7th of August, and 22nd of August, and a little bit below as well. There's another pullback resistance here at around that occurred on 16th of January and the 2nd of Feb as well. So we can identify the first resistance for WTI oil at around $71.91. And this also happens to be close to where the 23.6% Fibonacci retracement sits. And so this is the first resistance for WTI oil. Right, so we can see here yesterday's candle hitting a high over here before reversing. And at the same time, what was prior support levels can now potentially function as resistance as well. So this is actually now a pretty strong overlap resistance level that we've identified as the first resistance at $71.91. Now looking a little bit higher up, right, I see the next resistance probably coming in at around the 50 and 61.8% Fibonacci retracement, right? That's a pretty decent pullback taking place here as well. So this is where we can identify the second resistance for WTI oil at $74.56 per barrel here. Now we can get rid of all the other Fibonacci retracements. We're simply going to use 23, 50, and 61.6%. with crude prices bouncing higher, right? And also with it being in a strong bearish momentum, what we do have is a potential short opportunity for crude oil should it reach to this price zone here at about $71.50. So we may have a potential short opportunity for crude prices should we see this retracement continue to climb higher, right? So if it does rise up towards $71.50 in this region and manages to stay underneath the first resistance, we should have a potential opportunity for bearish reversal, right? But for now, right, uh, crude prices are retracing higher. And if you've gone long on crude prices, right, take note, you should be targeting your potential take profit zone at around a 23.6% Fibonacci retracement, right? So this level is at around $71.40, right? So yeah, if you've gone long on the WTI oil today, right? If you're playing the bounds on WTI oil here, I don't think this is going to be a very strong bounce, right? It's quite likely we're going to see WTI oil run into resistance at around $71.50 and around $71.90, right? So between this 40-cent range here, quite likely we're going to see crude prices stall once again. So should it indeed stall around this level and remain underneath the first resistance, we have a pretty good opportunity for potential bearish reversal for this commodity here, right? So for now, we do see a nice bounce currently in play. And if you've gone long on WTI oil, you should be targeting your take profit zone at around a 23.6% Fibonacci retracement for any long positions. And conversely, should WTI oil stall around this region by tomorrow, right? If it reaches this region by tomorrow, we may have a potential short opportunity as well. Now, looking at the 4-hour time frame, I see the levels are more than applicable, right? The resistance and support levels that we had identified on the daily time frame are more than applicable on the 4-hour time frame as well. Right, so these are the key levels for WTI oil for today. So take note of that. We're currently seeing a nice bounce, and we should see this bounce get exhausted at around the 23.6% Fibonacci retracement here. Now, this could happen by the end of today or perhaps even tomorrow as well. Right, okay, now let's move on back to the euro. Let's go back over to the major currency pairs and look at the euro. So we can see dollar weakness start to pick up over the last couple of days, right? On Wednesday and today as well. So the euro managed to find nice support here at 1.1044. So when I look across this level here, it's actually like a nice overlap level, right? We saw previously the euro running into resistance at 1.1047 on 14th of August, after which this level proceeded to function as a nice support from 30th of August till 4th of September. This level helped to stabilize, helped function as a strong support level for the euro to stabilize before bouncing higher yesterday, and that bullish momentum has continued over to today as well, right? So we see a nice overlap support level here at 1.1047, which can be used as in the first in identification of the first support. Second support is another overlap level, and I see that at around 1.0972. And when you look across it here, right, we see this level previously functioning as resistance in the second week of January, functioning as another swing high resistance in the second week of March, and also functioning briefly as resistance as well on the 5th of August. So what was a prior multi-swing high resistance then turned to function as a support on 16th of August, creating this overlap level here, which we can use to which we can use in the identification of the second support, which is at 1.0973. Now, very clearly, in terms of resistance, first major resistance for the euro is at this swing high here at 1.1192. And quite clearly, this is the first resistance here. And I also do see an intermediate resistance as well. And I do see an intermediate resistance at 1.1112. Now, this level here can be used as a potential take profit zone as well, like a partial take profit as well, right? Should we see the euro hit 1.1112, right? This is a decent area to identify a potential take profit zone for maybe half of the position right? You can close half the position should it hit 1.1112, right? After seeing a nice bounce from yesterday, should you have any long positions on the euro, this can be a suitable first take profit zone or first take profit level for any long positions on the euro. And of course, the ultimate or the next take profit level can be identified at the first resistance, which is at 1.1189. Right now, on this uptrend here, from 2nd of August till the 26th, we can also run a very nice Fibonacci retracement. Right, 1st of August here, this swing low going up to the swing high on the 26th. Let's pull up all the fibs. Right, we can see the 38.2% Fibonacci retracement aligned pretty well with the first support, and we see the 50% quite close to the second as well. So let's just keep 38 and 50% and highlight these levels as a zone here. These are strong support zones for the euro. Right, there we go. Now, of course, with dollar showing significant weakness, the bias for this currency pairs to the upside. So once again, the first take profit level can be identified at this intermediate resistance level at 1.1112, and the next take profit level can be identified at this swing high resistance at 1.1189. Now we can also run one more Fibonacci retracement on this downtrend here, starting from this swing high on the 26th of August, going down to the swing low on the 3rd of September. We can see that the 50% retracement aligns very well with the intermediate resistance. So let's keep 50 and 61 on hand. And we can see that this zone here could be a pretty strong barrier as well. Right, but of course, should we see significant weakness for the dollar continue to strengthen, then of course the euro is going to break through this resistance barrier that's identified by the 50 and 61%. So if we do see the euro clear this zone convincingly, right, we see a very strong break above this zone here, then of course we are very likely to see this currency pair hit its first resistance at 1.1200 quite easily. Now, zooming out a little bit, we can see that the next major resistance beyond 1.12 is going to come in at this swing high resistance that occurred in mid-July of 2023. Right, so this is another significant swing high resistance for the euro that occurred in mid-July of 2023. So this is a level that we're going to use in the identification of the second resistance here, and we can see the top of this wick climbs as high as 1.1225. So this is going to be a very strong resistance barrier here. Now, at the same time, right, I see a pretty decent ascending trend line, right? We have a pretty decent ascending trend line here, right? So for now, just keep an eye on this descending trend line as well, right? So any breakthrough this ascending trend line is going to signify maybe a strong pullback for the euro. But for now, it manages to trade above the ascending trend line, right? So we're quite likely to see this at least test the 50 and 61.8% Fibonacci retracement. Now let's zoom on down to the 4-hour time frame and see if there's a need to fine-tune the analysis. No, not really, right? You can see the levels that we had identified on the daily time frame are still more than applicable on the 4-hour time frame. And now we can see much more clearly that this barrier that's identified, or this zone that's identified between the 50 and 61.8% Fibonacci retracement could potentially be a strong barrier here, right? We see a nice pullback support level here, which could then function as resistance. We also see a pullback resistance at the 61.8% Fibonacci retracement as well. Right, a pretty strong resistance barrier here. But of course, should we see weak labor market data out of the US, this is quite likely going to propel the euro to climb even higher. So, right, take note, we have a fundamental reason for the euro to climb higher, and which of course is going to be led by the weakness in dollar, and that could be triggered by weaker than expected ADP and non-farm payrolls that's out today and tomorrow respectively, right? Okay, so once again, the 4-hour time frame, on the 4-hour time frames, the levels that we had identified for support and resistances are more than applicable as well. Right. Okay. So we've covered the euro, the commodities. And let's touch on the indices as well. And of course, should you have any other requests, do drop them in the chat box early so we have time to go through the analysis together. Right. Okay. So let's touch on the indices. Let's start with Germany 40. So this is the instrument that tracks the DAX futures. We can see the DAX futures had made a new intraday all-time high on the 3rd of September, hitting as high as 18,998.60. So this is the new all-time high for DAX, intraday all-time high for DAX here. And this instrument here, Germany 40, tracks the DAX futures. So quite clearly, the first major resistance for the DAX is going to be at this level. All right, okay, there's a request for Bitcoin. So yeah, sure, let's cover Bitcoin as well. We'll cover Bitcoin after this, and then we'll go on. We'll cover Bitcoin after we take a look at Germany 40 and US 500. Very quickly, first resistance is very clear, all-time high. Second resistance can be identified via a Fibonacci extension. So we're going to find that extension. We're going to run a retracement from this high on the 31st of July, going down to the low here on the 5th of August. Key extension levels sit at 137, 161%. And we can see that the intraday all-time high is exactly where the 137% extension sits. And we can identify the second resistance at the 161% extension level. And what about support, right? Price is currently testing support level here. So this level at 18,538 was previously a pullback resistance level here, which has now functioned as support on Wednesday, yesterday. So this creates a nice overlap, which we can use in the identification of the first support. So 18,528.80 is a nice overlap support. And for the second support, I see a nice pullback level here as well. Let's see, is it, yeah, probably here at 18,179. This can be used in the identification of the second support. Now, we can also run a Fibonacci retracement on this swing low, from this swing low on 5th of August, going up to the all-time high. Let's pull up all the fibs. We can see that at 38.2% and 23% retracements align pretty well with the second and first support respectively. So let's keep these two retracements on 23 and 38%. Right, okay, so these are the key levels for the Germany 40 DAX. So we have a potential bullish bounce for today, right? We have a potential bullish bounce in play, right? It has found support at this overlap level at 18,538. We could potentially see a nice bounce take place today and tomorrow as well. Looking at the 4-hour time frame, we can see that, yep, okay, the current 4-hour candle is pulling back. However, if should it stay above the first support at 18,528, it also would mean that the DAX has found support within the bullish Ichimoku cloud. Remember, the bullish Ichimoku cloud itself can function as an area of support, which is what we've seen since 4th of September, right? Since the 4th of September, the cloud itself has also functioned as an area of support, and as long as it manages to stay above 18,528 and stay within the cloud here, we have a pretty good opportunity for a potential bounce for Germany 40. Right, okay, now let's move on over to US 500 and start the analysis on the daily time frame here. Right, so intraday all-time high for US 500. This is the instrument that tracks the S&P 500 futures. So intraday all-time high was formed on 16th of July at 5,669.80. So this is the first resistance here, which is a swing high resistance. Now, in this scenario, how can we possibly identify the next resistance here? So in this case, we can use a combination of Fibonacci projections and extensions. So let's use a projection first. So projection is going to start from here, 0.1, 19th of April, going up to 0.2, 16th of July, ending at 0.3 on 5th of August. So we can see that the 78.6% Fibonacci projection aligns very well with the intraday all-time high. 61, of course, has been surpassed, but we can see 100% at 583. So let's get rid of 61.8%. And we can identify the second resistance at the 100% projection. Now, we can also run a Fibonacci retracement from here. This high on the 1st of August going down to this low on the 5th. key extension levels once again stand at 127 and 161%. And we can see this respective extension levels align very well with the first and second resistances. So this is how we've identified we've identified the first resistance via the all-time high, right? Via the intraday all-time high, as well as using the 78.6% projection and the 127% extension. Similarly, the second resistance level has been identified via a combination of the 100% Fibonacci projection and the 161% Fibonacci extension. Right, so this is how we can identify potential resistance areas when a particular instrument is trading close to its all-time high. Now, US 500 has found support at around this level here. This is not the strongest level, so I'm going to identify this as an intermediate support here. And at the same time, there should be a Fibonacci retracement that we can use starting from here. Let's run a retracement from 5th of August going up to the high, which is on 2nd of September. Let's pull up all the fibs. We can see that 23.6% retracement aligns quite close to this level here, the intermediate support, and the next support is close to the 50%. So let's keep 23 and 50. And the first major support for US 500 should be around this level here at 5,402. So once again, for this, okay, right now for the US 500, this is a little bit in no man's land here because this is not the strongest support level, right? This pullback level here is not the strongest support level. So it's sort of like in limbo. So we may have a potential bounce or a potential bearish continuation here, right? Take note, this is not the strongest support level, unlike the DAX, right? Unlike the DAX, we see a pretty strong support level here. So this is quite likely to function as a potential bounce, especially on the 4-hour time frame. As long as price manages to stay within the bullish Ichimoku cloud, we have a stronger case for a bounce here for Germany 40, but for US 500, it's sort of in limbo because when you look at it on the 4-hour time frame, it has already crossed underneath the bullish Ichimoku cloud, right? The cloud in this case did not function as support. It did function as nice support on 28th of August, but in this case it didn't, and it's like testing a very fragile support zone here. So hence, for the US 500, it's a little bit in a state of limbo, right? It could go either way, right? It could go either way at the present moment, right? We may get a little bit more clarity by the end of today or maybe tomorrow. All right, now let's move on over to Bitcoin. All right, so before we start the analysis of Bitcoin, I'm just going to launch a poll as well and truly appreciate it if you guys can give your feedback with regards to today's webinar. And then we'll continue the analysis on Bitcoin. We'll wrap up today's session with Bitcoin and probably another one more instrument. All right. Thanks everyone for the feedback. Truly appreciate it. All right. Okay. Just gonna keep the poll running for a little bit longer. All right. Great. Okay. Thanks everyone for responding as well. All right. Truly appreciate it. All right. Now let's just continue as well. All right, so let's start the analysis on Bitcoin. So you can see here, Bitcoin is under pressure as well after making a swing high resistance here on 25th of August at around $64,258. It has dropped quite sharply, and it looks like the downtrend is resuming today as well, right? So it had actually found support here. This level here was a pretty decent support level at 57,000. 181, right? We saw a nice swing low support or pullback support level, pullback support take place here on 15th of August, and Bitcoin finding support once again on the 1st, 2nd, and 3rd of September as well here. However, this level looks to be finally get taken out, right? This level looks to be finally be taken out. So what we're currently seeing is a potential bearish breakout for Bitcoin here. And we have a potential bearish breakout scenario on hand, right? And if we see this pullback or this drop, this bearish breakout extend even further, where I would identify a potential take profit zone would be this support level here. I see a strong multi-swing low support. The first support level swing low took place here on the 5th of July, and another swing low taking place here on the 5th of August, right? So this is where I would identify The first, this is where I identify a potential take profit zone or level for Bitcoin. Should we see this bearish breakout extend even further? So 53,550 is a pretty decent area to identify as a potential take profit zone, right? In terms of resistances, right? Let's see quite clearly. This is the first major resistance should be here, right? This is a nice pullback resistance taking place here on 2nd and 3rd of September earlier this week. You can identify this as resistance. And of course, the second resistance, significant one, is going to be this swing high here that occurred on and this third week of August here. Right, let's look at it on the 4-hour time frame. And before that, I actually also see a nice, pretty decent descending trend line as well for Bitcoin here. Now let's look at it on the 4-hour time frame, right, and see if there's a need to fine tune the analysis. Right, we can see Bitcoin continuing to trade underneath this descending trend line, as well as trading underneath the bearish Ichimoku cloud. Remember, when the cloud is red, it highlights the ongoing bearish momentum, and we can see that clearly as well. In fact, I would say we probably have a bearish channel here when we look at it on the 4-hour time frame, right? Pretty decent bearish channel, not the best bearish channel, but you can see what I'm getting at. We have a pretty decent bearish channel on the 4-hour time frame as well, right? And it looks like it has broken through this support level now, right? This is going to be key, right? I think to get real conviction of a bearish breakout would be for Bitcoin to break through 56,138. Although now we do see it trading in a bearish channel and the bias is to the downside, but to get a very strong conviction that we can see this bearish momentum gain further traction would be for it to break underneath 56,138. Now, in terms of stop loss, right, I would use the top of this wick here at 5,551 as a potential stop loss level, right? I would place it slightly above it, right? I wouldn't place it exactly at this level here, maybe at 5,600. Where is it? Oh, sorry, not 5,600. Sorry, oops. Yeah, sorry. So probably just a little bit above the top of this wick and just above the upper trend line of the bearish channel as well. So we have identified a strong resistance area that's identified by this swing high that took place on 4th of September, as well as this upper trend line of the bearish channel. So when we are trying to identify a suitable stop loss, we're not going to place it at exactly the resistance level here, but just slightly above it to give us a little bit of a buffer, right? So for any potential bearish short opportunities for Bitcoin, right, we're going to look for it to well, to get further conviction, right, we need it to break underneath this downside confirmation level at 56,138, and then we can target the first support at 53,550 as a potential take profit zone. Now, if you don't wish to keep a very wide stop loss, right, if you look at it here, this is actually a pretty wide stop loss. If you don't wish to keep a very wide stop loss as this, what I would suggest would be to use this level here at 5,728 and place your stop loss just slightly above it here. So maybe at around 557,350 would be a suitable area as well. Because we see here, this is like a consolidation area as well. We see a nice support level here taking place on 2nd September. We see a little bit of resistance here on the 5th. So this creates a sort of overlap level that we can use in the identification of a potential stop loss. If you don't wish to keep a stop loss that is wide as this one here, that's at 58,700, you can use this intermediate level here at around 57,350 and then have a potential short opportunity for Bitcoin while looking for it to break underneath the downside confirmation level at 56,138 and eventually, hopefully, target the take profit zone at close to the first support, which is around 53,500 and 54,000. Right? Okay, so that brings us to the end of today's session, right? I hope this has been a great opportunity for a great session for all of you. And before we end as well, take note of the economic calendar for today and tomorrow, right? It's going to be a very volatile period, especially tomorrow on Friday at 12:30 p.m. GMT, where we have the Bureau of Labor Statistics release its data on non-farm payrolls and the unemployment rate as well. Right, it's going to have a huge impact on the direction of the dollar, gold, and even, of course, the equity markets as well. Right. And but before that, today we have the second dose of labor market data, which is ADP, uh, the ADP employment report, as well as the unemployment claims. Right. So should we see the ADP report come in lower than its forecast once again? And at the same time, we see unemployment claims come in higher at 231,000, right? That's quite likely going to function as a strong bearish catalyst for the dollar, right? Take note of that. And also, of course, an BLS employment report as well. Should we see another round of softer than expected data, right? If we see another non-farm miss, that means we see the actual result coming lower than the forecast of 164,000, while we see the unemployment rate increase. That's also going to quite likely going to function as a very strong bearish catalyst for the dollar, right? So take note of that. And yeah, I wish you all the best in the trading journey. And do look out for these economic events for tonight and tomorrow, because they'll have a huge impact on financial markets. All right, thanks everyone for tuning in. Have a great trading week, and of course, as we wrap round up to the or work our way up to the weekend, do remember to chill out and spend time with your family and friends as well. Right, have a good weekend and refresh yourself for a brand new trading week starting Monday. All right, take care, everyone, and yeah, and wish you all the best in your trading journey. Right, and yeah, do watch out for the upcoming labor market data today and tomorrow.